Hey guys, it's Steve Lamont, the founder at Elevate Realty Group, and this is the second video of 2023. And today I wanted to talk about the often misrepresented and misunderstood loan product called a reverse mortgage. I'm actually putting a family member through the qualification process of a reverse mortgage currently, and I've helped many people who had reverse mortgages over the years. And I thought it was gonna be really beneficial because it's a great tool over the long run as you get older to access money and stay in your home long term versus selling your home to fund long-term care or whatever the case may be. So I'm gonna break it down because it is a very complex loan product, but we're gonna break into a nutshell who benefits from a reverse mortgage, what are the risks, and what the heck is a reverse mortgage? So a reverse mortgage is just as it sounds. It's a mortgage in reverse. So basically they're taking the equity you have in your current home and they're giving it back to you, whether it's in a lump sum, you can choose to have a lump sum, or monthly payments. So let's say you have $300,000 in equity that you can access with a reverse mortgage. You can choose to have that $300,000 given to you at one time, so they'll write you a check for $300,000, but you're paying an interest rate on that $300,000 versus taking out a $300,000 mortgage and making monthly interest and principal payments. You're just doing it in reverse with a reverse mortgage. Now, the interest rates tend to be 1% to 2% over the current prime. So if rates are at 5.5, a reverse mortgage interest rate's probably closer to 7%. So who benefits from the reverse mortgage? I believe, and I've seen, the people who benefit from a reverse mortgage are people who want to stay in their home, and they actually can stay in their home, like they are healthy enough to be in their home. They want to increase their retirement income, and by doing so, it's going to allow them to stay in the home for a longer period of time or get care. And I would also say number three, the biggest component is they are older in age and they are not at risk for outliving, let's say, the money that's currently in equity. And what I mean by that is you have to be 55 to get a reverse mortgage. If you are 55 and you get a reverse mortgage and you're planning to live for 20 years, one of the challenges can be, and this is the number one risk of reverse mortgages, one of the challenges could be you can outlive your money, meaning you could withdraw all the equity of your current home plus interest, right? And you can actually outlive the equity in your current home. That is the risk of using or utilizing a reverse mortgage. So the key benefits are, if you have high equity in your home and rather than going to like senior apartments or for long-term care, liquidating other assets, you can use a reverse mortgage to go ahead and do that. Some of the costs associated with the reverse mortgage are key. It's not an inexpensive loan to get. So the recent quotes that I received with closing costs was somewhere around $22,000 for our family member. So they're not cheap to get, and that impacts how much equity you can take out, right? So let's break it down again. In a nutshell, reverse mortgages are a great tool. I actually think many older Americans can benefit from using a reverse mortgage to help pay for long-term care, so long as their heirs know that they're not doing the reverse mortgage too soon. I would say if the family member is gonna live an estimated 7 to 10 years, you should use a reverse mortgage. If they need to live longer than 10 years, you might be at risk for withdrawing too much of your equity and not having any left. Number two, the key point is reverse mortgages are expensive. So make sure that you have plenty of equity before going through the process. Key point number three, all loan officers can do reverse mortgages, but not all loan officers know how. So seek out a true professional. I cannot stress this enough. It is a very complex thing and it's very risky because you're withdrawing equity and you just want to make sure that the borrower and your family member is educated. For example, our grandfather, who we're doing this for right now, doesn't have high income, doesn't have a 401k, but has hundreds of thousands of dollars in equity in his current home, and he just needs like $1,500 a month to help subsidize his living expenses. He's a perfect candidate for this. So if you ever want to bounce ideas off of this with me, reach out to us at 916-436-SELL or visit homesbyelevate.com. And don't forget, our programs like Trade-In, Concierge, Cash Offer are all innovating the way that we move. Reach out to us today. I hope you guys have a great January.